4th. And this is, of course, your daily financial news. As I had mentioned yesterday, we are doing the next 4 days. We're going to do them early. It's important for me to show you discipline, consistent effort. So I actually set my alarm clock this morning, which is the first time in 10 years probably, but I didn't need it. All right, set the alarm for 5:30 a.m., got up at 5. We'll see if I set it tomorrow. Probably will. But again, wanted to go through and make sure I reviewed, got my list of daily notes so we can talk about what's going on. I think today's a great day to make some money, be a little bit better than yesterday. And for those that are commenting on the new hat, the new logo, first and foremost, I think you're right. It kind of points to the fact that, one house, one rental at a time, far better than the original. And again, thank you, Teresa. My daughter created it, and I just wanted to give her some props. So if you like the hat or other goodies from One Rental at a Time, there should be a link below. Check it out. Support the channel. That would be great. When we're looking at the daily news on Thursdays, we got to start with the unemployment claims. They just came out. I got the high level number. I didn't get the breakdown, but they came out at 745,000. First time claims, new claims, expectation was for 750. This is not good. This is expected. I think we could be 6 to 8 weeks away from breaking significantly lower. Right, we're right at the tail end of the tunnel. The pain, the just icky economy. We're almost through it. The spring will be here and summer, and I believe the economy will certainly get cranky, but we still have a few hard days left. And when you look at new unemployment claims at 745, you just gotta imagine that's a hard day for lots of folks. But for me, someone who looks at history, right, the peak before this crisis was in the Great Recession. I think the peak number was 660,000 claims. Now that was the peak week. We have suffered that number, greater than that number, for like 52 weeks in a row. So put that in some perspective. This has been pretty painful for lots of folks. Moving on from claims, we got a bunch of earnings announcements out, and many of them weren't great. First off, you have Okta coming out. Again, they hit, but they gave weak guidance. Okta is a software company. We are starting to see a trend from software companies where guidance is weak. Expect the NASDAQ to get hit today, I would suspect. In addition to that, Okta is trying to buy growth. They have agreed to buy another software company for $6.5 billion. As someone who worked in software for more than a couple of decades and was part of acquisition teams, integrating technology and sales teams, I can tell you, good luck. That is hard to do. You are likely going to create incentives for the new team to integrate with the old team, and then fast forward 12 months, a lot of the acquisition team will just move on and do something else. So again, Okta, I expect to be down. They are using their stock as capital for a $6.5 billion acquisition. Typically, market doesn't like that. Next up, you got Marvell Technologies in the chip space. They gave, again, weak guidance, and they're actually highlighting that the chip sector, which we've been talking about for a quarter now at least, typically around auto manufacturers, but then to video games, is probably going to be tight for a year. A year, man! This supply chain has been significantly disrupted. Vroom is you basically sell and deliver cars. They missed on the bottom line, reported a much bigger loss than expected. Again, lots of misses. BJ Wholesale, kind of a Costco competitor, they actually hit top and bottom. But unlike a lot of retailers we talked about the last 3 or 4 weeks, they did not give guidance. And I don't think the market is going to like that. I would think, at least based on my, daily review of numbers, most retailers are giving guidance now for the first time. And when BJ Wholesale did not do that, I think that's going to be a red flag. Walt Disney is in the news. They are going to be shuttering about 20% of their Disney stores. They have 300 today. They're going to close 60. They're going to focus on e-commerce. That'll be interesting to see if that sticks. I haven't been to a mall in over a year, but there was a Disney store in a mall that I frequented, and it was always packed with kids. That's one of those stores you go by, as a parent with a 5, 6, 8, 10-year-old, and they just kind of veer left. I wonder how many impulse buys there are at that store. So I wonder if Disney keeps that up. Next up, Snowflake, one of those high value software companies. Their loss doubled in Q4. And also be aware that their employee lockup is tomorrow. So I don't know this for sure, but I imagine there's going to be a little extra selling tomorrow, if you know what I mean. Some employees have been eagerly awaiting to get cashed out so they can go buy their toys or go buy their house or go buy whatever they want to do. Other things that I captured this morning that I thought were interesting: the average car loan payment is almost $600. Wow. The average car payment is $600. Lots of people buying new big SUVs. When I look at a $600 car payment, I think, oh my God, you're committing like $1,200 because you have insurance and maintenance and all that other stuff. And if we're looking to become financially free, that was one of the goodies that I sacrificed for a better part of 10 years is we just had old cars. But yeah, the average loan is $35,228, and the average payment is just shy of $600. We got to have some superpowers, delayed gratification, right? We gotta sacrifice now for a better future later. Next up, we have a former New York Fed. Former New York Fed really poking his I don't know, poking the Fed in the eye. I kind of like this article. He's basically saying, talking about the bond market and the stock market's fit last week, right, where the 10-year spiked to 1.6 and the Dow and NASDAQ fell by 2% kind of in a day. I think it was Thursday or Wednesday. He's basically like, get ready because the Fed wants the economy to run hot, hot, hot. He's basically saying, the Fed is going to eventually, they're going to be late to the party. Historically, when he was there, they tried to arrive on time. But he's like, not this Fed. This Fed is going to be late on purpose. Think about that. That means the economy is going to run hotter for longer, which is really what we've been talking about on this channel. But then when the Fed gets to the party, folks, they are going to have to be aggressive. We're not talking these little quarter point hikes every other session. When they come, we could see the dastardly half a point hike a couple of sessions in a row. He's out there talking about, 1.6 spike last week is nothing. He asked what would happen if rates on the 10-year were 3 or 4%. When I read that, I shook because a 4% 10-year probably means the 30-year mortgage is over 6.5. Think about what that does to real estate. That's going to slow the real estate market down. That is going to take some unaffordable markets down. That is going to make multifamily investing interesting because you have to refi out the commercial stuff. It could be, it could create a problem for sure. Just to put it in context, he is not calling for that this year or even next year. He's like, what if it happened in 2023 or 2024? I don't know about you, but when I look at my cost of capital, debt structure, consumers, I have to consider those things. So as I have been saying, for the better part of 6 months now, if you are thinking about doing real estate investing, please, bold, capitalized, underscored, italics, please get 30-year fixed rate money if you can. Try to get something in the 3s or below and just be happy. Because I promise you, if you have a 3% 30-year mortgage and suddenly the 10-year is at 4%, you're going to be in a pretty good spot. So it seems like we have maybe 18 months left to get our chips lined up. If you're doing that, if you need help learning your market, doing the work, of course, I have my awesome course with over 1,000 people in it now. Link is below. But remember, if you buy it, you spend the $200, which is hard-earned money. Make sure you're ready to do the work because, you know, I come out the gate hot and require you to get focused and do daily activities. So if you're not ready, don't bother. Other things I saw is Goldman Sachs is actually calling 7% GDP growth for the year, not for Q1, for the year. That's going to be fun to see. That will be the highest GDP growth since 1984. 1984. Another thing I saw today is 1 in 20 people moved in the last year. I thought that was a pretty big number. 1 in 20? And of course, a lot of that is people leaving urban areas, or leaving apartments, leaving, Class A apartments and moving to the suburbs. But I don't know, 1 in 20? I'm not sure I believe that number. I might have thought 1 in 50, maybe. But 1 in 20? That seemed pretty high. And then lastly, just again, it's a great day to make some money, be a little bit better than yesterday. I'm going to go to my first Tony Robbins event, Unleash the Power Within here. I guess it starts in about 19 minutes. Not sure what to expect. It was very, very nice of Ty, Adrian to invite me to come. So I'm going to come. I'm going to have lots of coffee. We're going to see what it's about. Have a wonderful day. We are unfortunately not speaking with Jonathan today because of this. I did try to schedule it even earlier, but it didn't work for his schedule. So we will pick all of our expert interviews up next week. We are going to always do the daily show. It may be our only video the next 4 days. Take care of yourself. Bye. Have fun. Take care.